on the economical side, Raoul, of course, talking about Italy means talking about Europe and talking about the world. But there's a lot of talking about Europe itself, right? So Europe is less prepared to deal with supporting the economy because it has less ammunition on the monetary policy side and on the fiscal policy side. Fiscal policy side because of the cultural clash historically between the German-led austerity and the Italian-led approach to, or Latin-style approach to the rules, if you want. Now, there's a few points I would like to make here. First, organically, let's not forget that the welfare system in Europe is better suited for these crises. We've already seen this in the past, in the global financial crisis. Now, this is, of course, the flip side of the coin of then having a continent that grows more slowly. But in this moment in time, it's the downside that matters more. So take, for example, the social tools available as safety nets. In Italy, we have the Cassa Integrazione, which is like a wage guarantee fund managed by the INPS, the National Institute of Social Insurance, that pays 80% of the salary for about a year. It kicks in very, very quickly, and it did kick in very, very quickly for small companies these days. And that helps a lot in avoiding layoffs, moving the cost from the private to the public. Again, that might come at a slower growth in the future, but who cares today? So that's one thing that people should not forget when comparing Europe to the other continents.
You're trading social benefit for growth, which some people don't understand, but Europeans took that, and in many respects, it helps cushion the worst outcomes, as you say. It kind of gives you a bit of downside protection for the average person, but it gives upside issues for sovereign debt.
Correct. Now, back to the monetary and fiscal policies. So monetary policy, for sure, the rates are well below zero. We know that, so there's not much room to decrease those. But does it really matter? Is lower interest rates what matter in this moment in time? If a small company is cash flow negative, they need money. They would pay 10% rate. They don't care whether the rates are at 0 or 1 or 2 or 3. So I don't think that matters much. And that's something that we could expand on talking about the Federal Reserve move. But it doesn't do any harm, but that's not the pure solution. On monetary policy, we know there's many unconventional tools that by now are conventional. And the ECB started using some of those yesterday, despite the communication error of Mrs. Lagarde. Some of those tools are already active. Banks are being helped, and banks are giving out credit more quickly to the small companies. They're calling the companies, telling them, we have the tools to help you a little bit, to improve your overdraft limit, and so on. This is happening. Talking to people on the ground, we have evidence of this happening. Now, on the fiscal policy side, it's a more cultural question. I think that before the coronavirus started, we were already in a very different situation. So we've all heard the political pressure on Germany, also from internally, from the bottom up, call it Black Zero, call it Green New Deal. So we have to admit we're in a different situation. I don't think Europe will let Italy go. We have had already a couple of evidences these days. Mrs. Merkel, a couple of days ago, the sweet repeat of Draghi's July 2012, withdrew whatever it takes. That applied to monetary policy, of course, because he was at the helm of the ECB. She's in politics, so that applies to fiscal policy. Hopefully it won't apply just to the media. And then Mrs. von der Leyen of the European Commission, that in a perfect Italian, I wonder whether she speaks Italian or whether she was reading, but it did work perfectly, gave a message saying, siamo tutti italiani, we are all Italians. That wasn't a fake message. This is an exogenous, makes everybody feel bad. And as opposed to other situations in the past, there's not anybody in particular to be blamed. There wasn't any financial inconsistency or bad governance causing this. It's a more complex conversation. Maybe you have seen the video, the TED Talk of Bill Gates from 2015 at Ebola time. So that's impressive. That's what we should be talking about, not Italy and Europe. So that's clearly a shared global response.
Yes, but I guess the issue, I mean, the next phase seems to be, and we all kind of knew this when Lagarde came in, is the next step for monetary policy in Europe is tying together fiscal and monetary, somehow combining the nations, getting rid of the kind of fiscal the deficit ceilings, and allowing some ability to move. What is your impression that the Europeans are going to do? Because they're going to have to do something really big at some point, because it's not just Italy, right? You know, as you say, I mean, this is the whole of Europe that is in the same boat, just at a different phase. So they're going to have to do something extraordinary to not lose the banking sector and to not lose all the small businesses and that kind of thing. What is your impression that they're going to do with the fiscal monetary combination?
That's a tough question to answer. I think they will go very gradually and very wisely. Maybe that will mean the markets in the short term will be disappointed as they were yesterday, but I don't see the style changing. Having said this, I think the help and the support that is needed will come. So the budget deficit limits will be relaxed. Of course, it will be temporary, or the declarations will be, it must be temporary. And rightly so, because this probably will have a temporary impact, not a permanent impact, or hopefully so. But they will come. So I'm pretty confident that they will do the right moves. And luckily, I'm not there to take the decision for them.